Impulse trading is deceptively simple to recognize, yet painfully difficult to control. Most traders know the feeling, a sudden surge of excitement or fear, a market move that seems urgent, and before you know it, you've entered a trade without analyzing your plan. Acting on these impulses is easy, but the cost can be devastating. Losses pile up, confidence erodes, and frustration becomes a constant companion. I've been there myself. I can recall nights where I watched the charts, restless, waiting for a setup that never came. Then, without thinking, I jumped into a trade just because it felt right in the moment. The result was almost always the same, a loss that could have been avoided. I wasn't trading the market, I was reacting to my own emotions. Impulse trading originates from several psychological triggers. Fear of missing out is one of the most common. That knowing feeling that the market is moving without you, that every second you hesitate, opportunity slips away. Greed is another driver, tempting you to chase a trade beyond your original plan. Even boredom and overconfidence can push you into impulsive action. Understanding these triggers is the first step toward controlling them. Professional traders approach the market differently. They recognize impulses as data, not commands. Every time a sudden urge arises, it's a signal to pause, check their plan, and reaffirm risk parameters. They don't suppress emotions, they manage them. This mental discipline separates consistent traders from those who drift from trade to trade, hope to hope. One strategy I implemented early in my career was to write down my trading rules and commit to them visually. Before entering any trade, I would check my plan: entry, stop loss, take profit, and risk allocation. This act of reviewing before executing transformed impulsive decisions into informed ones. Over time, it became a habit, a mental checkpoint that protected me from mistakes. Another technique is journaling not just trades, but emotional states. Recognizing patterns in behavior is incredibly powerful. I learned that certain market conditions triggered anxiety that led to impulsive trades, while fatigue often weakened my resolve. By acknowledging these patterns, I could anticipate when I was likely to act rashly and intervene before it happened. Impulse control is also about environment. I began setting rules to limit screen time, reduce distractions, and avoid markets during periods of heightened emotional stress. Trading with a clear mind reduces the likelihood of reactive decisions. It's not just strategy, it's mental hygiene. I also incorporated deliberate pauses into my routine. If an urge to trade impulsively arose, I would wait several minutes, review my plan, and reassess the setup. Often, by the time I returned, the urgency had diminished, and I could make a rational decision. These small acts of self-control accumulate into a powerful habit of discipline. Over time, these practices transformed my approach. Impulses didn't disappear. They never fully do, but they no longer dictated my actions. I learned to treat each impulse as a moment of observation rather than reaction. Market moves became information rather than threats. The difference is profound. Trading becomes less stressful, more predictable, and more profitable when you act according to plan rather than emotion. Every trade aligns with your long-term strategy. Overtrading decreases, losses become manageable, and confidence builds. Discipline is not a natural trait for most traders. It's cultivated through awareness, practice, and intentional behavior. Controlling impulses requires patience and repetition. Every time you pause before acting, every time you review your plan, you strengthen your mental framework. This framework becomes the backbone of your trading career. Ultimately, controlling impulse trading is about self-mastery. You cannot control the market, but you can control your reactions. Each small act of restraint adds up, creating consistency, reducing risk, and fostering resilience. Traders who master this skill operate with calm precision, unaffected by sudden moves, emotions, or external noise. The journey to controlling impulses is gradual. It requires honesty, reflection, and sometimes uncomfortable awareness. But once you integrate these habits into your daily routine, your trades reflect strategy, not emotion. You begin to respond rather than react, execute rather than chase, and build a foundation for long-term profitability. Impulse trading is not a failure of skill, it is a failure of mind. The market tests patience, discipline, and clarity. By understanding your triggers, adhering to your plan, and managing your emotions, you transform impulses from dangerous distractions into opportunities for conscious decision-making. That transformation is the essence of professional trading.